Look, I'm about to tell you something that sounds insane, but stick with me because by the end of this, you're going to see the world completely differently. There's a metal, a simple, shiny metal, and it's about to cause the biggest economic shock since the 1970s oil crisis. I'm not talking about gold. I'm not talking about Bitcoin. I'm talking about silver. And here's the crazy part. Nobody's paying attention. While everyone's freaking out about stocks and crypto and real estate, silver is sitting there, dirt cheap, about to explode. And when I say explode, I don't mean go up 20%. I mean multiply by 5, maybe 10 times, maybe more. You think I'm exaggerating? Good. That's what everyone thought before oil went from $3 to $35 a barrel in the 1970s. That's what they thought before palladium went from $500 to $3,000 in 4 years. And that's exactly what they're thinking now about silver. But the people who understand what's coming, they're buying, quietly, before everyone else figures it out. Let me show you why. So first, let's get one thing straight. Silver is not just some shiny rock people make jewelry out of. Silver is everywhere. Your phone? Silver. Solar panels on houses? Silver. Electric cars? Silver. Medical equipment? Silver. 5G towers? Silver. Every piece of modern technology relies on silver. Why? Because silver is the best conductor of electricity on Earth. Better than copper. Better than gold. Nothing beats it. And here's the problem. We're running out. Not in 50 years. Not in 20 years. Right now. Today. As you're watching this video, the world is consuming more silver than it's producing. And it's been doing that for 3 years straight. Let me put this in perspective. In 2020, global silver inventories sitting in warehouses and exchanges? About 400 million ounces. Today, under 60 million ounces. That's an 85% drop in 4 years. 60 million ounces sounds like a lot, right? Wrong. That's less than 3 weeks of global consumption. 3 weeks. Imagine, if the world only had 3 weeks of oil left in storage, what would happen to the price? It would go absolutely insane. That's where silver is right now. And almost nobody knows. So why is this happening? 2 reasons. Demand is skyrocketing, and supply is stuck. Let's talk about demand first. The world is going through something called the energy transition. Governments everywhere are forcing the switch from oil and gas to solar and electric. Europe, China, America, everyone. They're spending trillions of dollars on this. And guess what every solar panel needs? Silver. Every single solar panel uses about 20 grams of silver. Doesn't sound like much, right? But when you're installing millions of these things every year, it adds up fast. In 2020, solar panels used 85 million ounces of silver. By 2026, that number is projected to hit 200 million ounces. That's more than doubling in 6 years. And it's not just solar. Electric vehicles use twice as much silver as regular cars. 5G infrastructure needs it. Medical devices need it. Every laptop, every phone, every piece of electronics needs it. Industrial demand for silver is over 1 billion ounces per year, and it's growing. Now let's talk about supply. And this is where it gets really bad. Global silver mine production? It peaked in 2015 at 880 million ounces. It's been flat or declining ever since. You'd think with prices going up and demand exploding, companies would just mine more silver, right? Wrong. Here's the thing nobody understands. You can't just mine more silver. 70% of silver isn't even mined for silver. It's a byproduct of mining zinc, lead, and copper. You dig for those metals, and silver comes along with it. So if copper prices are low, companies slow down copper mining. And when they do that, less silver comes out of the ground. You can't control it. And even if you wanted to open a brand new silver mine, it takes 7 to 10 years from discovery to production. We don't have 7 years. The shortage is happening now. Before we go deeper, if you're starting to see what's coming, do me a favor. Hit that subscribe button right now. We're Money Trap Channel, and every week we break down the financial moves, the hidden patterns, and the money opportunities that nobody else is talking about. This silver situation is happening in real time, and you don't want to miss what comes next. All right, let's keep going. So we've got demand doubling. Supply stuck. Inventories collapsing. What happens next? Well, history tells us exactly what happens. Because this isn't the first time this pattern has played out. There's a 4-stage cycle that happens with every commodity shortage in history. And silver is now in stage 3. Let me walk you through it. Stage 1 is complacency. The resource is cheap and abundant. Nobody worries about it. Nobody invests in finding more. Everyone just assumes there will always be enough. That was silver from 1980 to 2020. For 40 years, silver was boring, cheap, ignored. In inflation-adjusted terms, silver today is cheaper than it was in 1980. Think about that. 45 years of economic growth, technological revolution, and silver is cheaper. That's complacency. Stage 2 is when demand surges, but supply can't respond. A new use case appears. Technology changes. Suddenly everyone needs the resource, but supply takes years to ramp up. Prices start rising, but slowly at first. Most people don't notice. That was silver from 2020 to 2023. Solar demand started exploding. Electric vehicles took off. But mine production stayed flat. Inventories started dropping. Prices went up a bit, but nothing crazy. Stage 3 is recognition of the deficit. This is where we are right now. The market wakes up and realizes supply isn't coming back. Inventories are gone. Shortages start appearing. People panic. Prices spike. We're seeing this happen in real time. Silver inventories down 85%. Premiums on physical silver rising. Delivery times extending. Industrial buyers are stockpiling because they see what's coming. Stage 4 is panic and price dislocation. Governments start hoarding. Industries fight over supply. Investors flood in. The price doesn't just rise. It detonates. It gaps up. $50, $75, $100. And that's not speculation. That's math. When there's no supply and everyone needs it, price is the only thing that adjusts. Let me prove this pattern to you with 3 examples from history. And once you see it, you can't unsee it. Example 1. Oil in the 1970s. For 25 years after World War II, oil was cheap. $3 a barrel. Gas cost 30 cents. America built its entire economy on cheap energy. Nobody worried about running out. That was stage 1. Then demand exploded. Europe rebuilt. Suburbia expanded. Everyone bought cars. But US oil production peaked in 1970. America became a net importer. New supply was years away. That was stage 2. Then in 1973, the Yom Kippur War happened. OPEC cut off oil exports to the West. Prices quadrupled overnight, not just because of the embargo. People suddenly realized cheap oil was over forever. Gas lines formed. Panic set in. That was stage 3. By 1980, oil went from $3 to $35 a barrel. That's 10 times in 1 decade. Inflation destroyed the economy. The 1970s were a disaster. That was stage 4. Example 2. The Irish potato famine in the 1840s. Ireland's 8 million people relied entirely on potatoes. They were cheap and abundant. That was stage 1. In 1845, a blight from America wiped out 40% of the potato crop in 1 season. The next year, even worse. That was stage 2. By 1846, everyone knew this was a multi-year collapse. And here's the dark part. Wheat was available. Grain existed. But prices spiked so hard that poor people couldn't afford it. Physical shortage caused price dislocation so extreme that available food became inaccessible. That was stage 3. 1 million people died. 2 million fled. Ireland's population dropped 25%. That was stage 4. Example 3. Palladium in the 2000s. In the 1990s, palladium was cheap. Boring. Nobody cared. That was stage 1. In the early 2000s, emissions laws tightened. Palladium became the preferred metal for catalytic converters in cars. Demand surged. But palladium is a byproduct. You can't just mine more. Supply stayed flat. That was stage 2. By 2019, palladium had 8 consecutive years of deficit. Inventories were gone. Russia supplied 40% and had no reason to flood the market. Physical supply decoupled from paper contracts. That was stage 3. Palladium went from $500 in 2016 to $3,000 by 2020. 6 times in 4 years. The only thing that stopped it was car companies switching to platinum at massive cost. That was stage 4. Oil, wheat, palladium. The pattern is always the same. Complacency, inelastic supply, recognition, panic. And now it's silver's turn. So you might be thinking, okay, but technology will solve this. They'll find a substitute. They'll recycle more. They'll mine more. Let me destroy those ideas one by one. Substitution? Not happening. There is no substitute for silver in solar panels that maintains efficiency at scale. Copper oxidizes. Aluminum doesn't conduct well enough. You cannot engineer around the periodic table. Silver is the best conductor. Period. Recycling? Recovery rate from electronics is below 20%. Silver amounts per device are too small to be economical, and solar panels last 25 years. That silver isn't coming back anytime soon. New mining? Takes 7 to 10 years to bring a new mine online. And silver grades in the ground are declining globally. Even if companies wanted to mine more, they can't do it fast enough. Demand destruction? The only way demand falls is if the energy transition stops. And that's not happening. It's mandated by law. Europe, China, America. Trillions of dollars committed. This is policy. And policy doesn't care about silver prices. Here's what people don't understand. Silver sits at the intersection of three unstoppable forces. The energy transition consuming silver exponentially. The monetary crisis driving people to hard assets as governments print money. And the supply crisis with no solution. When these three forces collide, and they're colliding right now, the price won't rise gradually. It will gap. It will dislocate. One day you wake up and silver is $50, then $75, then $100. And everyone who didn't see it coming will be asking how they missed it. I'm not telling you to sell everything and buy silver. I'm not your financial advisor, but I am telling you to pay attention. Because this is happening in real time, right in front of us. Go verify this yourself. Look up silver inventories on the COMEX. Check the IEA solar forecasts. Read the Silver Institute supply and demand reports. It's all public, all verifiable. And when you see the numbers, you'll understand. This isn't hype. This is math. Consumption exceeds production. Inventories are gone. Price must adjust. That's the only possible outcome. And here's the thing about silver that makes it different from every other commodity. It's not just industrial. It's also money. For 5,000 years, silver has been used as currency. It's trusted. It's liquid. It's a store of value. When people lose faith in paper money, they buy gold and silver. So you've got industrial demand exploding, and you've got monetary demand waiting in the wings. When those two forces combine, when the solar panic meets the currency crisis, silver doesn't just go up, it explodes. The people who see this pattern, who understand the machine, who position before stage 4 hits, they're going to be on the right side of the biggest wealth transfer in commodity markets in 50 years. Everyone else will wonder how they missed it. And if you want to understand how the financial system has been suppressing silver prices for decades using paper contracts, and why that suppression is breaking down right now, you need to watch the next video on your screen. Because what's happening behind the scenes in the silver market is bigger than most people realize. Click that video. Watch it. Because the more you understand about how this game is played, the better positioned you are when it all breaks. And drop a comment. Tell me, do you think silver hits $100? Or am I crazy? I read every single one. Until next time, stay sharp.